Thursday, April 19th, 2018, Monaco 64, home of alternative economics and contrarian views. So I did get the day of the week right today. It is Thursday. I didn't yesterday, even though I got the date right. Billy is going to get his haircut later on this afternoon. So don't worry. It's starting to get warm here in London. I want to talk about a couple of things. The most interesting thing is where the price of gold should be if the US government reset the price to the levels, equivalent levels they did in 1934 when they reset it officially by the Gold Act of 1934 from $20.67 an ounce to 35. And then in 1980 when they let the market reset the price of gold when gold spiked to $887.50 and marked almost kind of the top of interest rates, the top of the bottom of the stock market, and led to the bull market in bonds, to the bull market in financial assets that we've had since then. That was a reset done by the market. I'll show you how I came about the calculation. Before that, of course, I'm going to look at the markets, and gold continued to do well. We had a very good day, especially for silver yesterday. So 830 spot gold is 1354, up almost $5. The high's been 1355, which was pretty much yesterday's high. The low has been 1348. Silver is up another 10 cents at 1728. Or up 0.5%. The Dow is up 30 points, 24,775. Nominally higher. S&P is virtually unchanged, up only a point at 2709. The NASDAQ future is up 10, 68.42. Currency-wise, the pound has dropped back. Yesterday, it dropped quite a bit from like a 143. We're now 142.07. Euro, stronger this morning, up 0.25%. Just at 124 exactly. 124 against the dollar. And the dollar is slightly stronger against the yen, only 8 pips, 107.30. Crude oil continued to go up. It's 68.90, up 45 cents. The WTI. And now to the calculations. So the calculations I did were per, for example, per national debt, percentage of national debt. So I took the US gold holdings in 1934, which were approximately around 202.5 million ounces. I took the national debt, which was 27 billion. And then the price of gold, which they reset to $35. And I did the calculation, and the value of the gold that the US held was 26% of all the debts. Roughly about a quarter, so they leveraged basically the system to a quarter to one, 4 to 1 in 1934. So 27 billion in national debt, 202.5 million ounces approximately of gold at $35 an ounce. So I come to around $7 billion worth of gold with a 27 billion national debt. So that's 4 to 1, roughly 26%. 1980, I have the debt clock for 1980 here, and you can see it's 887.5 billion in January. 877 billion in April. The same day today in 1980 was around 877 billion. Then I went back to January 1980 when the price of gold spiked to 887.50. That was the high according to Jim Sinclair. He always talks about that number. So I took that $887 per ounce and multiplied it by the holdings, which were roughly the same as today. So 261.5 million ounces. And it came out to 26.4% of the U.S. national debt, which was 877 billion at the time, roughly, which is quite interesting because it's almost the exact same percentage as 1934. You kind of wonder if that was, it was through the market that the price of gold went to that level, but you kind of wonder who controlled the market and who still controls it today. So nowadays, though, by statute, the U.S., it says here on Wikipedia, as of December 13th, the Federal Reserve reported holding 11.037 billion face value of gold certificates. And it says the Treasury backs these certificates by holding an equivalent amount of gold at the statutory exchange of $42.02 or $42.22 per troy ounce of gold. And it goes on to say, though the Federal Reserve does not have the right to exchange the certificates for gold, as the certificates are denominated in dollars rather than in a set weight of gold, any change in the statutory exchange rate towards much higher market rate would result in a windfall accounting gain for the Treasury. You kind of wonder, why haven't they done this? Why does the Treasury have to take on so much debt? Why are they still valuing it at $42.02 per troy ounce or 22 cents? Well, maybe it's because they leave it to when they really need to reset. 1934, a year before in 1933, we had the bank run, the bank holidays, the U.S. financial system almost failed. So they needed their gold. They needed to reset the value. 1980, the same thing. You had people rushing away from the dollar. And they needed to let interest rates rise. Paul Volcker to over 20%. So that was a dire time for the U.S. financial system. So they can do it, but it's weird that they still keep it at this $42.22. So I've done the calculations now. If the U.S. Treasury, or they could allow the market to do it and still, but as you see here, if they reset the statutory rate, is very easy to do. It could be a windfall for the Treasury. So let's say today, as you can see, the national debt is 21,143 billion. I've done it in billions, so it makes it easier to talk about it. You can see 1934 is 27 billion. 1980, 877 billion. Now we're at 21,143 billion, or 21.1 trillion. So I've done the calculations here. So for all the gold holdings, which are still supposedly at 261.5 million ounces, if we wanted a 26% gold backing for the debt, we need to have just under 5.5 trillion book value of gold for the U.S. Treasury. And to be exact, 5,497 billion. Right now, we've got 353 billion. If we look at the market price of 1350, you multiply that by 261.5 million, you get 353 billion backing the whole 21.1 trillion. So if you wanted to have 26% backing, it would have to be 1350 times 15.57 times, which comes to a price of 21,022 per troy ounce. And that would be the price they would have to reset if they wanted to go do the reset similar to 1934 and similar to 1980. Am I saying this is going to happen? No, but it just goes to show you how gold is undervalued. And am I saying it's going to happen in 2018? No, not. It's probably going to happen at a time when there's really massive crisis, existential crisis for the US dollar. That's probably when it could happen. And I'm not even saying it's gonna happen. Will they actually just also change the statutory price? Because don't forget, in 1980, they reset the price, but they never changed that $42.22 statutory exchange rate. So would they just let the market do and still keep that statutory rate? There you go. That's the 21,022. That's the rate they have to reset to if we wanted to do similar resets as a percentage of the national debt that happened in 1934 and 1980. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet, and make sure you also click on the little bell so you get notified of my new videos. You can also watch me on Steemit or DTube and on Twitter. And I'll talk to you later. Bye.